beyond tourism. Why Mauritius is Africa's blueprint for fully integrated digital financial infrastructure. Purpose: shock plus curiosity plus promise plus emotional tension. This is not just a tourism story, this is a power story. Africa's quiet wealth blueprint. Most people look at Mauritius and see beaches, palm trees, hotels, tourism brochures, a beautiful island in the Indian Ocean. But that may be one of the most expensive misunderstandings in African economic thinking. Because while much of the continent has spent decades chasing visible development, roads, bridges, ports, industrial zones, mega projects, Mauritius appears to have been building something far more powerful, an invisible wealth machine, a system, a financial operating architecture, a place where capital, regulation, payments, corporate structuring, investment channels, trade positioning, and international investor confidence can move in one integrated flow. And here's the real twist. This may not just be about Mauritius. This may be about what the rest of Africa has been missing. Because if Africa wants industrialization, serious diaspora capital, deeper capital markets, scalable entrepreneurship, and stronger domestic wealth creation, then the next real battleground may not just be infrastructure on the ground. It may be financial infrastructure beneath the surface. And if that's true, then Mauritius may be one of the most important case studies on the continent. So what exactly did Mauritius build? Why are sophisticated investors quietly paying attention? And could this island nation hold one of the clearest blueprints for Africa's next wealth era? This is Africa Global Opportunities TV, where we decode Africa's hidden wealth systems, strategic investment shifts, and the opportunities most people see too late. And in this video, we're breaking down why Mauritius may matter far more than tourism, and why diaspora investors should be paying very close attention. Section 1. The Big Misread. Why most people undervalue Mauritius. The tourism trap. What most people miss. Wealth isn't always loud. One of the biggest mistakes in African investment thinking is this. People often confuse visibility with value. If a country has massive rail lines, giant bridges, industrial megaprojects, and highly visible construction, people assume that country is where the future is. And yes, physical infrastructure matters. But the uncomfortable truth is this. Concrete alone does not create wealth, it enables wealth. To truly create wealth at scale, a country also needs legal predictability, capital routing systems, digital financial rails, trusted regulatory frameworks, investor confidence, institutional depth, cross-border financial functionality. And that is where Mauritius becomes extremely interesting. Because Mauritius did not become strategically relevant by trying to outcompete Nigeria in population, or Kenya in regional scale, or South Africa in industrial depth. Instead, it appears to have focused on something smarter, becoming useful to capital itself. That's a different game. Not just, can we build things, but can we become a place where money feels safe, structured, efficient, and scalable? And once a country solves that, it begins to attract a very different class of attention. Not hype, not noise, but serious money. And serious money rarely moves emotionally, it moves structurally. That's why Mauritius matters. Because what it offers is not just beauty, it offers a lesson in economic architecture. And for diaspora investors, entrepreneurs, and long-term African builders, that lesson could be worth more than many headline projects across the continent. Section 2. The Real Game. What integrated digital financial infrastructure actually means. The system beneath the system. Money needs rails. Capital follows trust. Let's make this simple. When we say integrated digital financial infrastructure, we're not talking about just having banks. We're talking about an entire ecosystem that allows capital to move smoothly, legally, digitally, and at scale. That includes banking systems, cross-border payments, digital finance rails, business registration structures, investor protection frameworks, tax clarity, capital market access, financial regulation compliance systems, institutional trust. In other words, it's not enough for a country to say, we are open for business. The real question is, can money actually work here? Can an investor enter efficiently? Can a company structure cleanly? Can funds move with confidence? Can deals close without chaos? Can institutions support scale? Can capital stay productive over time? Because here's the truth many people don't want to say out loud. A lot of African opportunity exists, but not enough African opportunity is investor-ready. That's the gap. And Mauritius appears to have spent years trying to close that gap. Not perfectly, not magically, but strategically. That matters because wealth creation is not just about production, it is also about financial usability. If African entrepreneurs cannot easily raise capital, if diaspora investors cannot confidently deploy funds, if local companies cannot access long-term financing, if investors fear instability, opacity, or friction, then opportunity remains trapped. And trapped opportunity does not become national wealth. It becomes potential, and potential does not pay. That is why integrated financial systems matter so much. Because countries that make capital easier, there may be a much bigger story unfolding. A story about capital, trust, architecture, and the future of African wealth. And if you can see that story early, you may be seeing where the next serious opportunities are forming before the crowd catches up. If this video gave you a new perspective, subscribe to Africa Global Opportunities TV, because here, we don't just talk about Africa, we decode where the real opportunity is shifting. If you enjoyed this, you should also watch our next video on why Africa's next wealth shift may be hidden in financial infrastructure, not headlines.